So today's event is all about the misuse of the furlough scheme and insolvency. And we're joined today by Jason Elliott, who's our head of business recovery, and Jess Morley, who is our furlough expert. So I'm going to share my screen now, Jason, and then we'll...
Thanks, Claire. Much appreciated. Yeah, the misuse of furlough and insolvency. The budget last week, I think it was referred to as a Back to the Future budget. And to pay homage to one of my favourite films, I'm going to do this as a Back to the Future presentation. So I'm going to start off with focusing on now, which is the COVID aspects of the budget from last week. I'm then going to take you back in time to the reliefs that were put forward. And then we're going to go into the future, where I'm going to give you some predictions as to what I think happened. So let's crack on. If you're Back to the Future fan, this is the 1985 portion of it. So here we go. So the COVID budget put forward last week by Mr. Sunak. So what did he do in relation to the COVID aspects? So furlough and self-employed, he extended it until the 30th of September. The existing C-bills and bounce back applications, he confirmed that they were to end on the 31st of March 2021. There was no mention of an extension or otherwise of the Corporate Insolvency Governance Act or the Landlord and Tenant rules, both of which I'm just going to comment on in a few minutes. He introduced the recovery loan scheme that is apparently going to kick in as of the 6th of April. And again, I'm going to talk to you and tell you what we know about that in a couple of minutes. And then the big one for me, the thing that I've been going on about for a period of time, he talked about the creation of a task force whereby the government are investing circa £100 million to recruit over 1,000 furlough fraud investigation officers. So I'll come back to that one in a second as well. So let's start off with the recovery loan scheme. What do we know? Well, first and foremost, not a lot. It was a bit like when he introduced the C-bills, they came out with it and then said, watch this space. And that's very much what happened last week. So the details are to be released before the 31st of March, but are expected to be in line with the historic C-bills and bounce backs. So effectively, we believe it's going to be a replacement. Funnily enough, I was speaking to a funder that does C-bills and bounce backs, and they've been told they have to reapply to be a funder on these recovery loan schemes. So they don't have a lot of details at this moment in time. But what we believe is that the recovery loan scheme applications will be between the 6th of April until the 31st of December at the end of this year. Again, whether or not that's extended, only time will tell. I suppose it depends on how the recovery from the pandemic goes forward. What will it cover? Well, loans and overdrafts are going to be available between 25,000 and 10 million per business. Invoice finance and asset finance is going to be available between 1,000 and 10 million pound per business. The finance terms are going to be up to 6 years for loans and asset finance agreement, and a 3 years maximum repayment for overdrafts and invoice discounting. And the big thing here is that where businesses have previously benefited from C-bills or CL bills and bounce backs, they can also benefit from the RLS scheme as and when it's introduced. From a director's perspective, there are going to be no personal guarantees taken up to 250,000, and no matter what the amount is, the borrower's principal private residence cannot be taken as security. And the eligibility, and you'll hear me talk about this for the next 5 or 10 minutes on numerous occasions, the company must be viable or would be viable were it not for the pandemic and the impact of COVID-19. So let me take you back now. This is the 1955 portion of our Back to the Future. So we're back in time now to the landlord and tenant forfeiture provisions. Well, they came into force in June 2020 for an initial 3-month period. They were extended to the end of September, then to the end of December, and then again to the 31st of March. As at this moment in time, there's been no comment on whether or not they'll be extended further. But you'll see if you read forward that I'm expecting that to happen. I cannot see how these don't get further extended. And what does it mean? It means the landlords can't forfeit leases for unpaid rents and rates, nor can they use the CRA rules, the commercial rent arrears recovery rules, to enforce other remedies, distraints, sending in bailiff, the things that we hear about all the time. But bizarrely, they are still able to issue winding up petitions. Again, the second time I'm mentioning it, the arrears were supposed to be due to COVID. So therefore, where companies can still afford to pay the rents and rates, they were encouraged to do so. And as I've already alluded to, more bad news, and this is just my prediction, expect another extension. So that's landlord and tenants, and that comes hand in hand with the CIGA, the Corporate Insolvency and Governance Act, which, like the landlord and tenants, came into force in June 2020 for an initial 3 months, and like the landlord and tenants, has been extended and is currently in force until the 31st of March. And that was slightly different in that it was intended to provide a breathing space for solvent businesses, and there's that viable and solvent word again, who were financially affected by COVID-19. So the arrears or the issues must be COVID related. It was not supposed to be a charter for already insolvent businesses to kick the can down the road and take the reliefs on offered. So historically, the businesses were required to show some level of solvency. However, and this isn't a criticism in any way, shape or form, it hasn't been policed. And I think the insolvency stats that I'll refer to later in the presentation will show that it hasn't been policed, and therefore businesses that weren't intended to benefit from the CIGA relief provisions have done so. And that has created a suppression in the true position of businesses that continue. And the insolvency stats, as I've said, I think will reflect that. And I'll get to that in a little while. So what were the CIGA reliefs? Well, the main one was the suspension on the creditor's ability to file statutory demands or winding up petitions. There was also a suspension on wrongful trading for directors. Let me come back to that. You see, I put ish at the end of that. Let me come back to it. It introduced a new temporary insolvency regimes that included light touch administrations and new rules around moratoriums. Not planning on going into that in any way, shape or form today. If anybody's any interest, happy to do so. You can contact me separately. There's the ipso facto rule. The utility providers can't demand the arrears are paid for ongoing services for gas, electricity, or the utilities. But remember, all these should be underpinned by historic solvency. And you will realise why I keep banging on about that when I get a little bit further down the line. So wrongful trading. The suspension of wrongful trading, it was initially included in the CIGA. But if you've been present on any of the previous presentations I've done, and if you have, I apologise in advance, or in arrears, should I say, I've banged on and on and on about Mr. Sharma. When he came out with this, he talked about checks and balances, and I was very, very concerned that this was a massive red herring. And what happened was, when it was originally put into force, it expired at the end of September. When it was extended for the period from October through to December, the wrongful trading, the suspension of those provisions was removed. So directors became culpable for the second period. But when Rishi Sunak announced the further extension from the 1st of January to the 31st of March, it was put back in. It's a massive red herring. It won't protect directors from businesses, or potentially won't protect directors from businesses where it can be shown that they were insolvent as at the time of the introduction of the CIGA. And there could be, based on what I'm about to say, significant fallout directors when the reliefs are eventually lifted. And it leads me into the Finance Act. And this is the thing that I really, really wanted to talk to you about today. So let me give you just a little bit of background. So total government support as at December 2020 totaled circa £133 billion. And the definition of support is the obvious furlough, C-bills, the large bills, the self-employed support, and the bounce back loans. And in a period leading up to October, HMRC advised us that the fraud hotline was red hot. And as of October, apparently, it was racking up circa 10,000 calls a day from concerned people, employees, neighbours, call them what you want, alleging fraudulent activities of their neighbours or of businesses. So what HMRC did, they had an amnesty. And what they said is, lay down your guns. And if you lay down your guns by the 20th of October and you return your payments that you now accept you shouldn't have had, we will accept it was an error without any further repercussions. But if you don't, there will be repercussions. And we're not going to tell you what they are at this moment in time, but there will be repercussions. So on your head be it, here is your amnesty. So the amnesty came and went, and what happened? Schedule 16 of the Finance Act provides that any person, I'll come back to that in a minute, who received any form of support that they weren't entitled to, either because they shouldn't have qualified it or because they haven't spent the monies in accordance with the specific rules laid down under that support, that person becomes liable for that debtor's income tax or corporation tax plus a 100% penalty. So let me give you a working example. Jason Elliott Limited. I like movies, so I sell movies. And I have 3 members of staff, and I put my 3 members of staff on furlough, and I claim furlough for 6, 7, 8 months. But in the meantime, they're actually still working. They might not be doing full time, but they're still accepting emails for orders for movies. But I continue to claim this furlough. And the company, this isn't about insolvency, the company then files its accounts, and for whatever reason, HMRC, under their new powers, pick up on my company and decide to do an investigation, and they come to the conclusion that I have breached the furlough rules. They will issue my company with an amount that's equal to the amount I've claimed in furlough. So let's say it's £40,000 over that period. I will have a tax charge within my company of £40,000 plus a penalty of another £40,000 as a slap wrist for doing it. That's it. Okay, so what normally happens then? Well, then a director will come to see somebody like me and say, do you know what? My company might now be insolvent. It's been hit with this liability that I wasn't expecting. What do I do? And I give them advice, and I say, well, listen, Mr. Director, the fact that you've allowed this to happen and your company has now been served with a liability notice under Schedule 16 causes you a problem, because under historical legislation, I would say to you, your company's insolvent, you need to take the right advice and put your company down. That now doesn't kill the liability, because the company has been given a liability notice under this section. If you now enter formal insolvency, the directors are jointly and severally liable for that £40,000 plus penalty of £40,000. If you have claimed support that you weren't entitled to, and this isn't about insolvency, and the company continues, and for whatever reason, HMRC picks up on it, and Rishi Sunak has already commented on these 1,000 furlough fraud officers he's going to employ, and they pick up on it, and your company is issued with a penalty, and you then decide the company's insolvent, the debt does not get left behind. It is very, very important that you understand that the repercussions could be significant if HMRC follow through with it. Will they? We've been here before. In order for them to do this, it is going to require a large undertaking. But I talked about it 5-10 minutes ago. He talked about a task force. He specifically referred to furlough fraud officers. The support is not limited to furlough fraud, but if I'm being honest with you, it's the low-hanging fruit. It's the easier kill. In the hotline that they purport to have, the tip-offs are likely to be from disgruntled employees or from people that know that employees are being non-furloughed but being claimed for furlough by their employers. That's just a hunch. That's where I expect the low-hanging fruit to be. My colleague Jessica Morley may have a different opinion when she speaks, but that's where I imagine if they are going to employ 1,000 officers, that is where they will seek to get their low-hanging fruit. So please be careful. If you feel you are in breach of anything, please take advice sooner rather than later. Okay, so you'll be delighted that I'm nearly finished. Let me give you some final thoughts. And I think it's fair to redress the balance and say that the government had to act in unprecedented times. And their initial response and concern was to protect the NHS and save lives, but they were mindful of the effects. And listen, it's been a moving feast throughout. You'll know that they've changed the goalpost all over the place because they didn't really know what was going on. So it's always been very reactive rather than proactive, and it continues to be the case to this date. They've introduced furlough. They've told HMRC to take a very liberal view, and you'll see I've written, they've been like pussycats in agreeing time to pays and deferrals for payments. They've given generous repayments of all the supports because they want businesses to avoid insolvencies. But it goes back to their intentions were to save solvent businesses, not to give a pull to those that were already insolvent. and they are aware, and HMRC have been crying out fraud, that businesses that should not have qualified have been able to claim these monies. So all the usual red flags of creditors and landlords and HMRCs have been inactive. The government, the HMRC and the monies have allowed companies to continue, and therefore the true position is suppressed, and the insolvency stats for 2020 reflect this. In the largest pandemic that there's been for 100 years, the insolvency stats show a 27% fall in corporate insolvencies between 2019 and 2020, which were already down 15% from 19 to 18. Last year, there was less than 13,000 failures during 9 months of effective lockdown. That is the lowest in over a decade. That cannot possibly be right. R3, who are my trade body, are estimating in excess of 500,000 businesses that will require some formal restructuring in due course. That doesn't mean an insolvency, but will require some form of restructuring. You know, the unemployment rates, I'm not going to comment on them. You can read what it says, but they're going up. But bear in mind, it's the highest it's been in 5 years. Without the support, this was expected to hit 4 million. The effects of the support, if they are only suppressing the position rather than remedying, means that the unemployment will go up and up and up for a period of time. But the true fallout will not hit by the end of 2021. It'll go well into 2022, and the final position will only be known following a significant time of the release of the current restrictions. So protect yourselves. You know, the governments are looking to recoup the support. You know, they've reintroduced claim preference for insolvencies. You know, that will generate a massive windfall if my trade body's estimate of the fallouts are right in the next 2 to 3 years, because businesses will inevitably fail. They're adamant that road directors will be brought to task. I'm not going to harp on about the task force again. We'll see. I've mentioned the hotline, but only time will tell when it comes to HMRC. This may be, and I'm not being glib here, another millennium bug moment, but now is the time to consider whether or not you need to take advice, whether or not you have any concerns about any of the supports you may have taken. We are here to help, and Jessica, who I'm going to hand over to in a minute, is an expert in certain furloughs. She will be able to assist you as, if, stroke when you are needed. On that note, thank you ever so much for listening, and I will pass you over to my colleague, Jessica Morley. Thanks.
Thanks, Jason. So as Jason's already alluded to, with the extension of the furlough scheme to the end of September and the dedicated task force that is now in place with the power to impose substantial penalties, it's now more important than ever that we review our furlough claims made in the earlier days and ensure that we're compliant going forward. This is particularly important due to the time pressure we all experienced, as I'm sure you remember, in the earlier days, and the lack of HMRC guidance which was available during the first claims. So based on this, we've put together a list of top tips based on our own experiences to help you check through your claims to ensure the compliance. If you have any further questions following this, please feel free to get in touch. So the first tip is the most straightforward and obvious one, really, but it's something we've seen issues with on reviewing some calcs, is check your maths. Check that your sums are all correct, especially important where you're using Excel, where you might have pre-populated formulas, and check everything works through to your final figures. And then after that, check that your calculation flows through correctly to the actual claim, because it's quite easy to transpose figures when you're in a rush, and these are the most straightforward errors to pick up, really. Next, we would advise that you go through the claim element by element and check each part individually. Firstly, starting with the employees, you need to ensure that employees are eligible to be included on the claim. Jason already mentioned it's a big no-no to include an employee that's actually been asked to work during the furlough period, and this extends to any kind of emails and any form of work, really, and there'd be evidence for this that could be picked up on easily by the task force. Should note, though, that there is an exemption for furloughed directors who need to carry out duties necessary to fulfil statutory obligations for the company. But this is a very narrow area of work, and it shouldn't be concerned with anything considered to generate revenue or providing services on behalf of the company. And so really need to be careful with that. And then finally, on employees, another important area is to check that the employee was employed and included on an RTI submission by the required date. This date will depend on the period of claim that you're making, but it's really important because quite often people have included employees based on the fact that they had a contract of employment and that they were employed at that specified date. But if they've not been on an RTI pay submission by that date, you can't include them. Next, we'll move on to the normal pay amount, which is used as the basis of the calculation. It's very important to check this is correct, especially where an employee receives variable pay, so a different pay each week or each month. Depending on the furlough period that you're calculating for, this will change, the reference point will change, so that definitely needs to be checked. And also where you've got employees which are slightly higher earners, we need to be making sure we're not claiming over the capped amount, which is $2,500 a month. But that also needs to be restricted for any periods of work where you're using flexible furlough. Tips and commission should be excluded from the normal pay calculation. And also a common error which HMRC has flagged is where you use salary sacrifice schemes in your payroll scheme. You need to make sure you're using the post-sacrifice salary rather than the pre-tax notional salary. Okay, so next area, we're just flagging a few common mistakes that have come up on claims. So if you have an employee and they're on furlough, they've been notified of furlough, and in that period they take some annual leave, or there are some bank holidays which fall into this period, they need to be paid 100% of their normal pay during this period, not the 80% or the 70% that you can claim back on furlough. So it needs to be making sure that you're topping up during this period. A second common mistake in the earlier claims, when you could claim back employers' national insurance on your claims, and there has been instances where this has been double claimed, because through the payroll scheme we've also claimed the employment allowance, so the money has been effectively claimed twice. So it's definitely worth reviewing your earlier claims in this area. In terms of record keeping, the same statutory obligations apply to normal accounting records. These need to be kept for a minimum of 6 years. So this will be important if any inquiries are opened into your claims. And also make sure you keep evidence of all correspondence with employees, notifying them of furlough, notifying of them when they're coming back. These kind of things need to be maintained too. It's worth noting that there are some useful tools that HMRC have put out there for use on these claims, which are updated regularly. We've found the HMRC online furlough calculator to be a really good tool, and that's, you're able to use that for all periods going back to the start. And we'd recommend, if you're using that, there is a facility to then save down your calculation as evidence of the claim and to show that you've taken due care to calculate it. So we'd recommend saving copies of these as PDF or hard copies, whichever suits you better. And then keeping up to date is also essential. As you're well aware, if you're calculating claims, the rules change all the time and guidance is being issued regularly by the government. So keeping up to date, very important. And the HMRC do have a facility where they send out support emails, which we find to be really useful. They remind you of deadlines and any changes in rates. And so we definitely recommend subscribing to those emails. And then finally, in the case where you do find an error, which hopefully you don't, but I think there are likely to be quite a few errors in this, and it needs to be resolved as soon as possible. So in the case of an overclaim, so where you've claimed too much on your furlough claim, you can rectify this on your next claim if you have one. If you don't have any more claims to make, say everybody's finished on furlough, you will need to ring HMRC and obtain a payment reference to repay the overclaim as soon as possible. Unfortunately, similar circumstances don't exist for underclaims. There are time limits on these. So you can contact HMRC on the same number if you think you've made an underclaim, but normally these underclaim amounts need to be rectified within 28 calendar days after the month the claim relates to. If you do find an underclaim and it's a genuine mistake, we'd recommend still ringing HMRC to see if they're open to adjusting for it, but that is their official stance on the matter at the moment. Okay, so there's lots of information there, but if you have any further questions or you need our assistance with preparing or reviewing claims, please feel free to get in touch.
Thanks, Jess. If I could just say one other thing in conclusion before I hand you back to Claire, and that is, this was meant to be advice. From my perspective, I appreciate that, you know, I'm throwing a lot at you, but ultimately there is a difference between fraudulent claims and errors in claims, and fraud is an intent. You know, you are intending to defraud. I can't imagine there's anybody listening or watching this that's made any intention to defraud. However, if you're not sure you've done your claims right, what Jessica has said is incredibly important, because what you want to do is try and spot them and rectify errors. But this isn't a situation where anybody should panic. So please don't listen to me and think the world is collapsing. That isn't the case at all. This is meant to make you aware of the seriousness of what HMRC can do. But the reality of the situation is fraud and intent is not the same as errors. And we are here to help you with, well, we're here to help you with both. But on the basis that there aren't going to be any fraudulent claims, we are certainly here to help to put the errors right. And as Jessica said, you can do it with HMRC, but we are here to help. So I would imagine Jessica will be the person you're really talking to as a result of this. But if you're not sure of anything, please do not hesitate to give me a call. And on that note, I'll hand you back to Claire. Thank you very much.
Brilliant. That's great. Thanks both for your time on that. As Jason said, our team are here to help. So we'll ensure that contact details for both Jason and Jessica are included with a copy of the video. So thanks for your time, both of you. That was great.